Hi, welcome to another episode of The Kingdom. I'm Ari Paley, analyst, and I'm here with two people you may be familiar with, Dip Patel, CTO, and Philip Ung, Head of Business Development. We're here and going to talk about the crypto winter.
I think that there's an important distinction, or there's an important framing exercise that should go on when we talk about crypto winter, and we should really put our arms around what that means. What crypto winter means is a bunch of retail investors lost a bunch of money, unfortunately, right? I think it was, June of this past year. I was in Miami, and I was talking with a server at this restaurant I was at, and she was like, "Yeah, I just bought Bitcoin," and I was like, "Oh man, this is bad. This is bad." And I think that was sort of indications when it had gotten so mainstream. I had taxi cab drivers, pitching me on the benefits of this investment. Of course, all highly speculative, right? And the result is there was a price correction, and a lot of people lost a lot of money. Does that mean cryptocurrency is dead? Does that mean Bitcoin's dead? Does that mean blockchain is dead? Answering those in reverse, I would say certainly not. We've seen IBM and other companies, including JP Morgan, launching their own blockchain initiatives. In the case of JP Morgan, an actual cryptocurrency initiative over the last quarter. VC investment into the space has not diminished. Companies continue to move ahead. But admittedly, there are a number of participants in the marketplace who are suffering. And those would be, of course, people who are holding the coin with the intent of value appreciation. Those would be people who speculate on price changes because in a low volatility environment, it's hard for traders to make money because there's not price swings that you can take advantage of. There would be a bunch of service providers, of course, your ICO raisers, your STO raisers, compliance firms. Those people are all suffering. Nevertheless, at least it's my understanding that Coinbase's valuation has remained pretty heady. Exchanges are still getting funded. New projects are still launching. So I actually heard someone speaking the other day, and they broke down cryptocurrency into not cryptocurrency, but blockchain into three buckets, and I thought it was a really useful rubric. So there's cryptocurrency, which is, of course, this medium of exchange. There's sort of the Internet 3.0, which John has talked about. And then finally, there's sort of the tokenization of everything. And so if you take those one by one, tokenization of everything continues to move ahead. Players like Templum and Tokenize and all those people are continuing to move ahead. The SEC continues to look into ways to track assets in a blockchain-based way. Internet 3.0, that would be where most of the VC funding is going. That's sort of, not most of, but much of the VC funding is going. That's sort of things like, new protocols and those sorts of things. Those are doing quite well, and they're still getting funded. And then that leaves us with the last bucket, and that's really where the winter is. That's where, prices are down, volatility's down, new coins aren't being launched every week. And so, before I just talk the whole podcast, Dip, is that a good thing or is that a bad thing?
Over the last 6 months, it's probably been the first question that a lot of my friends and family have asked me. It's, hey, I've heard Bitcoin's dead, And I would say that I don't think it's a bad thing. I think it's just a part of growing. I was actually thinking about this the other day, and when I was very young, I used to read these computer magazines, right? And these are magazines that would show you the latest kind of computing hardware coming out. You got to remember, there's no internet back then, so you couldn't just look up a blog and see what was going on. And so I remember, when AMD first came out, right? This is one of the big chip makers that competed with Intel. Back then, there were probably a dozen other companies making very specific CPUs, right? Central processing units. And some had very fast megahertz, which is the speed. And I used to remember, oh my God, look at this company. There was a company called Alpha. They had a really fast processor. But when you actually use the processor, it was crap because it wasn't balanced well. And I think that that's what happens, as a result of like, there's this, like you said, at the point where everybody's talking about Bitcoin, but nobody really understands it. There's a lot of inflated value on the entire ecosystem because everyone seems it like it's like Furbies, right? Everybody wanted a Furby for like 6 months. Then they went to crap, right? It's like any Christmas toy. And I think that Bitcoin for a lot of people was like this quick kind of way to hop in, right? And what's happening now is only the strong survivors are starting to actually make their way through this kind of downturn. And like you mentioned, right, the strong companies are still either stable or getting funding and growing. And from a technologist perspective, it's interesting and it's good because, to be honest with you, it means that there's less hardware and technology for me to evaluate. Right, the market is kind of already killed off like the weak competitors, and it makes it a lot easier for what we're going to be, which is really integrators of a lot of different components and inventors of how to integrate them versus the inventors of the components themselves. So,
right, and I think that's well, let's go back to, I guess, the last crypto fall, the season penultimate to crypto winter. What was it? To some people, and they're so glad to see crypto out of the news. They're so glad to not see blockchain, in their news feed every day, because fundamentally their analysis is it was irrational exuberance, right? All these people are running around. There's a lot of volatility. We're just buying, tulips. It was the last bubble.
Tulips.
Right?
Yeah, exactly. Yeah,
an inflated value. That may be the case, and in fact, that was the case. But on the other hand, it was not. To your point earlier, a lot of people said this is the internet revolution redux, right? This is another version of what happened in the past. And the lesson that you can take out of that is, there's two lessons. One lesson is it's a land grab, right? Get market share now, get in now, and you can survive, you can take market share because the market's going to mature and it's going to be large, but it only has space for a few large players. I mean, how many large chip manufacturers are there in the world, right? So on one hand, it could be a land grab. On the other hand, yes, there was a lot of sludge, there was a lot of slime, and a lot of people making money and delivering no value. Right. For the money they took. And in fact, that leads us into one of the benefits of crypto winter, which you alluded to, which is we're starving and there's fewer dollars chasing maybe fewer deals, but the deals that are worth doing they remain.
Right, exactly.
And that is a important a point because now there's less noise, right? I'm not getting pitched some crap ICO every week that I don't even know how to assess, blah, blah, blah. It's like, no, this is a very clear value proposition.
Right. And how does this directly affect Soluna?
Yeah, I mean, you take it first.
No, yeah, so I'll tell you what a lot of my friends, the way I've answered the question to them, and I'd love the reason I looked at Phil first was I'm a tech guy, and I don't answer these questions as a financer would, so I'm looking forward to seeing how you would answer it. But, a lot of friends have said, Dip, this downturn in Bitcoin price, has it sunk Soluna? And I said, honestly, if anything, it strengthens our business proposition because it makes the price of power even more valuable. Like as the price, if no one's making money, then the only people making money are the ones that have very cheap access to hardware and very cheap access to power. Excuse me. If you look at the hardware manufacturers, right, like Phil said, the kind of scrubby ones have died off. And the ones that are staying around, they don't have the leverage anymore to play price games because people like us who are actually going to buy the hardware are starting to become far and few between. And so as a result, we actually gain more leverage as a business, which is exciting to me. As a technologist, when we first started, even getting some of these chip makers on the phone, took very specific emails and big networks. Now it's like I can just call
doing anything. Yeah,
I can call any of them.
Whatever.
Exactly.
Yeah.
So I think from that respect, it's very good because fundamentally our business model is still monetize the world's cheapest and best and most sustainable green energy, right? And if anything, that's become more attractive.
Right.
We just have to survive the market. We have to ride out the market kind of stabilizing itself, I think. I don't know if that's the right word.
No, I think I don't know. I don't know if stabilization is the right word. I think that I do have a couple questions. I mean, but before we get into those, I think, again, for Soluna, what it means is you need to be resilient, right?
Right.
And,
That's a good point.
And that goes back to our business model, which is many paths to revenue. I think that the other lesson is you need to be capitalized. You need to be prepared for the downfall. And so we've already lived the cycle. We know what it looks like. And we're still here.
Yeah, exactly. And we're all smiling and excited.
Yeah.
So, yeah, it's a
I
good point.
think there's another point, which is that the starving is good because when the resources are scarce, there's fewer dollars. They're getting allocated more efficiently because you have fewer entrants, right? It's like, oh, I can come in, I can raise capital here very cheaply because there's a lot of dollars chasing, a few good deals. So let's just invent more deals. I think that's the one thing about the financial markets is Burton Mankel says, never underestimate the ability of the financial markets to deliver a product to you if there's demand for it. And that becomes a problem. If you look at the housing crisis, they said, oh, you want mortgage-backed securities or you want credit swaps? Well, we're just going to recollateralize them and we're just going to, we're going to keep chopping up the same thing. And that's how you create real systematic, very systematic risk. I would also say the other thing about the crypto winter is just because the prices are down and some of the speculation has gone away, I actually think that there is an argument to be made that the value of Bitcoin or any cryptocurrency is enhanced because what is the definition of money? What are the characteristics that make money money? 1, it's a unit of account. 2, it's a store of value. And 3, it's a medium of exchange. Well, if you have 30-day swings in price volatility, is it a very good unit of account or store of value? No, it's not, in fact, because you can't keep your retirement savings in Bitcoin. You can't keep your rainy day fund in Bitcoin because you don't know how much it's going to be worth 6 from now. When prices need to stay stable in order to serve those two functions of moneyness. And without those two functions, the third function, medium of exchange, can never take place, right? Because I can't, if it takes me 10 minutes to clear a transaction and the price has moved 15% in those 10 minutes, then you don't know what you're getting in exchange for whatever you're selling me, and that's a problem. The other thing I think about is the fact that we found the bottom, right? And it's somewhere above $3,000, right?
Seems that way.
Yeah.
Like, I wouldn't want to say that because I didn't want to bring that up because I'm a tech guy and I don't want to sound like a moron. But it's like, honestly, from a tech perspective, there's a lot negative that went down over the last few months, right? And quarters. And you're right. Like, it seems like it never kind of pierced that
whoever
$3,000
has,
limit.
What does that mean? That just means that people aren't willing. They're at this price on average, the market is choosing to hold. Or if they have an opportunity to buy Bitcoin below that price, they buy it, which pushes the price back up. So then the question is, really you have to look at transaction volumes, right? If volumes are way, way, way low, then that probably means that, everyone's just holding it. The market is dead. I don't think that's actually the case. I think volumes remain at a steady clip. Coinbase did quite well in the downturn because of people who, there had to be a trade to reset the price lower each time. It will be interesting to hear anecdotally what their results are, through the last quarter where prices have really been stable. The other thing I think that we're learning is, I think a lot more transparency is coming into the space, which is great. I read a really interesting paper about sort of faked transaction volumes on many major exchanges. We knew about that sort of anecdotally, but now it's coming very clear, and this is one of the sort of the main roadblocks to a Bitcoin ETF or any sort of unit of measure like that, because the SEC is basically saying we don't know what the price really is because there's a lot of market manipulation. Well, there's a lot less money to be made these days, first of all. And second of all, researchers and really smart people have turned their attention to this. And there's going to be a cleanup going on in the space. And I think that's great. I think also we know that institutions are preparing to enter the space, maybe not in the form that we envision.
But they're coming in.
They're coming in.
Yeah, exactly.
Look at JPM. And so that also tells you that there is going to be improved pricing. I mean, we know Fidelity's launching an exchange. We know there's a couple other that are coming in. And so that will improve pricing transparency. It enhances the moneyness.
That's a good point, because when we were building the initial kind of STO plan, one of the issues we had was digital custodianship, right? Investors who didn't know how to store their coin.
And those, by the way, those projects, from what I understand, are getting funded.
Yeah, that's what Fidelity just announced, their own version. Yeah, exactly.
And so that's a very important. It's very important, because then you know that you can securitize something, because the investor doesn't have to worry about cold storage, hot storage.
This is, and if you remember the internet, like, this is how it started, right? There were a lot of crappy websites taking advantage of this new tech. It was all getting funded, right? Eventually, those websites couldn't monetize. They went bankrupt. The websites that kind of stayed in the funding cycle were like news or content delivery, right? There were search engines, and there were the very early actual profitable e-commerce sites, right? And just about all the other crap kind of slowly disappeared. And then they came back when the internet, just like John said in his infrastructure inversion blog, right? Once the infrastructure kind of caught up, now all kinds of other e-commerce sites started becoming profitable, right? Yes, now I can deliver wine. Now I can deliver pet food. I couldn't in the 90s. There was no infrastructure. Couldn't ship pet food. Well, go ahead.
So as there's more infrastructure around cryptocurrencies, how do you think that will change the industry going forward?
Well, I think that's what we're seeing, right? That the infrastructure that's coming isn't necessarily customer facing. It's the back end stuff, right? It's stuff like custodianship, exchanges, right? It's more like not necessarily, hey, look at this cryptocurrency I hold. But it's just like when you use the internet now, and I swipe my credit card, it's no longer the phone line, right? It's going over the internet. Or even this blog is being delivered over an infrastructure that, Hollywood, for example, most of the people making great movies probably don't understand the network that actually delivers that movie anymore. They did back in the day when they had to print CDs and DVDs, and actually there was a huge cost center delivering the content. Now it's like, all right, well, we either go with Netflix, who takes this much, Apple, right? It's Amazon, pretty easy, and they don't worry about the tech behind it. And I think that's what Phil was saying. As these infrastructure players come in, right, what's going to happen is all of the actual value-add use cases are now going to have best practices.
But there's another aspect to that, because it's not that we're just in an infrastructure building phase, and so you should just invest in protocols and stuff like that. The people who are coming in right now, like custodies, exchanges and stuff like that, they're coming in because there's an actual real need, right? There's a white space right now, which is, I want to tokenize my bond. I want to tokenize my equity. I can't right now because,
that's a good point.
The hedge funds and the pension funds, they won't take that asset because they don't want to deal with the risk, right?
It's such a good point. The tech is solving a need.
The tech is coming for a need.
Driving.
Yeah. So it's always driven by a need, but it's apparent now where the near-term needs are. And custody and exchange is a big one.
Right.
And then beyond that, it's sort of that Internet 3.0 space. Privacy stuff.
And supply. Yeah, exactly. Supply chain and privacy, right, with identity and stuff like that. Those are still getting funded, from what I see. Like companies focused on, protecting data and protecting your identity, which is cool. I'm excited about that.
As the SEC starts regulating Bitcoin and other cryptocurrencies, how do you see?
Well, I don't think that's the correct. I don't know that the SEC is regulating Bitcoin. I think the SEC is taking a clear stance on the way that it's going to treat the market. They're not saying Bitcoin price is at this, or you can hold this or that. They're saying, well, first of all, in the security space, they're saying if you're offering a security, you have to comply with securities laws. And by the way, just because you paint it pink or call it a coin doesn't not make it a security. It's still a security.
So what the definition of a security is, they're reiterating.
I think it's yes, but also they're just saying because you fabricated this sort of complex structure, you didn't remove the security aspect of it.
Got it.
And so they're sort of going after some players. And then, but the stance that they're taking is very open. It's very much so. I think it's a lot of training and knowledge sharing from what I've seen. Mm-hmm. That's sort of the main space that we're seeing, is that they're trying to encourage the ecosystem.
And do you see that having an impact on the ecosystem more generally?
It's hard to say. I don't think that just because Bitcoin goes to an ETF or something like that, the value is going to change markedly. And I think that clear rules and treatment for digitalized assets will help it to be credible for institutions to invest in them. And I think those are the main things that they're doing. Apart from that, it's just sort of bringing transparency and shining a light on the area. I mean, I don't know. I think they did a good job. I think especially because we knew we were sort of in a bubble when it happened. When your taxi cab driver's pitching you on the benefits of Bitcoin, it's like, well, okay. So I think that they did a good job of going after some bad actors. Maybe they didn't catch all of them, or maybe they could have been more proactive in that area, but without strangling real innovation or causing it to move abroad.
And so with that, how do you see the network and the use of cryptocurrencies moving forward? Do you see more adoption and more uses by the general public?
Yeah, I think that's a tough question. I think that people are, well, first of all, you saw it go up and then you saw it go down, and now it's slowly ticking its way back up there. I think that you have a sense for a shape of price movement on one hand, and that's not investment advice, by the way.
Yeah, exactly.
On the other hand, I think that there are some real questions, like when the actual macro economy or the U.S. economy has a price correction, what's going to happen to this asset that's sort of, it's historically been highly uncorrelated, but in the term of its existence, the economy has been growing and unemployment has been falling and consumer sentiment has been strong. Mm-hmm. So when those reverse, what happens to this somewhat intangible, what happens to this completely intangible but nevertheless somewhat speculative asset? I think that's a real question, and I don't have a strong perspective on it yet. I think that it becoming a medium of exchange is something that we haven't seen a lot of in countries where we live, but that doesn't mean that it hasn't been adopted. I mean, we've seen adoption in Venezuela and other countries where there is not a medium of exchange because the currency's broken due to the way the government's regulated it.
That's what seems to be being used most widely now, in those places where the unit of exchange is broken, and that where there's like rapid inflation.
Yeah, they may as well trust an algorithm instead of randomness instead of what they know is bad.
Let's be clear about, I've heard some discussions about Venezuela, and I think they're very interesting, and I do follow them. But let's be clear about, the state of affairs in Venezuela. I mean, in the last year, the average citizen, or the citizens on average, so we're not saying one person or group, lost 24 pounds. That's a ton.
Whoa.
And
they're not a fat country.
No. And,
Yeah.
and approximately 10% of the population is exiting every year. So they're living in an environment that's very similar to, think Syria. Don't think, a democracy in turmoil or an economy in turmoil. This is a real crisis that's going on. And the U.S. in fact has said so. This is not my opinion. This is the opinion
and the people leaving are typically the higher performers.
Well, the
right?
people
the
who have
performing
the people
citizens.
who have the
Means
wherewithal to leave have left probably much longer ago.
Yeah.
In fact, actually, that's a problem in Venezuela right now. But putting that all aside, the point is to say that Venezuela is a useful use case. I mean, it's apocalyptic down there right now. People are going days without electricity. They're using Bitcoin because they have to. I don't think it's a strong example. I think that there needs to be other adoption. I mean, Japan, I think, will be interesting to follow, right?
That's true. I mean, even here, it's very limited pockets where you can actually use it for anything valuable. I remember going to a Bitcoin ATM in Austin. I was so fired up. I'd lost my ATM card, and I was like, I need some money.
Boom, there you go.
Yeah. So it worked out for me. But like you said, it's I don't know what that use case is going to be. Maybe you're right. Maybe it's like a place where there is no other alternative. It becomes a good alternative.
Yeah, right? I think the ones that people say most commonly are, international settlement, right? So, for example, I was trying to buy something from a friend of mine. She's like got a clothing brand, and she lives in Santiago, Chile, and I was like, she wanted me to pay her in pesos, and so I had to use like one of these money payment companies, and when you add it up round trip, they're taking 5-8%, and I was like, let me just pay you in Bitcoin, and then she was like, well, what's Bitcoin? You
have to explain it. Nice. But it worked, right?
No, she didn't. I had to pay her.
There you go. So there you go. That's where the infrastructure will help.
Yes.
Right?
Yeah. And I appreciate both of your perspectives. The technology and the financial aspects intimately linked.
I love it.
Cool.
Yeah. Thanks, Ari.
Okay.
Good.
Great. Thank you.
Thank you, guys.